Okay, so now let's talk more about this market. We see that the banks, and speaking of the banks, it was in the news that forbearance forbearance directive from the central bank at first had caused some jitters across the market, particularly for the banks. But at the same time, the banks have now come in to reassure investors, particularly the likes of Fidelity Bank, Zenith Bank, as well as Access Bank, and some others are going to follow suit. They've all mentioned that by June the 30th, that's by the end of this month, just over less than 2 weeks from now, that they would have cleared all the issues as regard the forbearance the directive from the central bank. Of course, that's one of the reasons why the market is really on fire. As we see the market's index level here, 117,088.62. But intraday, we saw a little bit of a profit-taking downturn on some other key elements of the market. But of course, we'll be tracking the intraday market numbers with our guest on the show just in a couple of seconds from now. Now, for the Johannesburg Stock Exchange, 94,578.50. That's the market number, but that was in the negative for that market. A little bit of fast fingers there. Now, talk about the EGX30. EGX30 for intraday is down more than 1.5%, 30,350.20. While for the close of Wednesday's trading session, the Nairobi Stock Exchange All-Share Index was in the green, 0.89%. Of course, we see lots of bargain hunting going on in that market. Of course, that market is expected to open Thursday's trading session in the green. So now let's take a deeper look into Nigeria's equities markets and also talk about the banks, because the banks are still in focus. On one side, we're counting down to the recap deadline, which is sometime next year, around March of next year. So now, but let's talk about the forbearance directive, which this is the aftermath. That announcement, the announcement was made sometime last week, over the weekend, and then we saw the impact. But this time we're seeing a positive side of that impact. And so let's delve deeper into that issue. And we have Omotola Imafidon, equity trader with First Security Brokers, to give us details about that. Thank you for joining us, Omotola.
Thank you, Anita. Good afternoon, everyone.
Okay, so I can see that investors and you traders are quite happy with this index level and the gains that we had in just one day. Now, can you tell us how are the sentiments for the banks, as regards this forbearance directive and other developments within the markets?
Okay, thanks so much. So what we saw early in the week was the fact that the market was sort of in panic mode. The banks sort of sold off at the beginning of the week when the CBN circular came out over the weekend, as people were not too sure who was affected and the extent of the impact. The CBN had said that banks that were caught up in the forbearance regime and the single obligor limit had to suspend dividend payments. And we know a key driver for investors in the market is their dividend. We're approaching the season for interim dividend payments, and we're hearing, okay, there will be suspension of dividend payments, executive bonus sees has to be suspended, and expansion into international markets for some of them. So that sort of sowed panic to the market. But as you've already mentioned, we saw that there's been reassurances from the banks. Some are saying that, okay, the positions will be fine by mid-year. Some by September. Some are saying, okay, we're putting structures in place. So market has responded positively to that. And coupled with the confirmation from the CBN that there's no need to panic, that the market is the banks are resilient, as we've said. So generally, the market responded positively to that from yesterday. So there were 2 days of decline at the beginning of the week, but yesterday we saw the recovery started coming, and today has been quite strong. So that's what we've seen.
Okay, so now let's move away from the banks and talk about the oil stocks. Seplat yesterday and Aradel, they were one of the major movers of the market, where we saw that 1.8 trillion naira in value added to the markets. Now, can you tell us what is the main driver for Seplat in particular? We know that it's an offshore oil company, but then also going into the energy market. So what is the latest driver for this equity as we speak?
Okay, yeah, thanks. So also the energy stocks they contributed positively to the market this week because of basically we've seen that oil price, the unrest in the Middle East has sort of made the oil prices to go higher. And of course, investors are also looking at it that, okay, there's still value in this space. So we saw Seplat, we saw Aradel taking higher. We saw renewed demand from mixed interest, both local participants driving demand in that space. So it's basically in response, positive response to the fact that oil prices are going up and their production levels too. It's improving as well. So those are the things that have driven the movement we've seen in that space.
Okay, so now that takes me to my final question with you. That okay, besides we've seen oil markets, that's Iran-Israel conflict, and then the forbearance. But besides all this, are there any other market developments or any events or announcement that would shape the direction of the market, whether up or down, in the remaining days of June?
All right. Okay, so for that, we are approaching end of Q2, that's end of H1. So the earnings expectation is also a major factor for investors at this point. Okay, so we're approaching when results will be released, when possibly maybe some of the financial stocks will be able to pay their dividends, and also the fact that a lot of stability is also in Nigeria economy at the moment. So those things will basically be the drivers of positive performance in the market. We can't rule out profit taking anyway, mind you, because people that bought the dip might want to also capitalize and book some profit. But we expect that earnings announcement, for instance, since Sterling Bank released their full year dividend over past few days, and market has responded positively to that. So that is that we've heard about PZ Wimba saying, okay, we are selling off a portion of our holdings to one of our subsidiary companies. And, that's for them, it's some income right there. So those are some of the other things that investors will be looking out to see. So there are a lot of things to look out for. So we just encourage investors to follow the news, stay with the fundamentally viable stocks, as we say.
I'm sure they definitely will, especially with your guidance. Like they always say, before any investment decision, consult your stockbroker. So thank you so much for your time on the show, and I'm sure investors will take your advice on that.
Okay. Thanks so much for having me. Bye.
That was Omotola Imafidon, equity trader with First Securities Brokers, formerly known as Ebian Quest. Okay, let's talk about the Middle East. Middle East is in the side notion of eyes. Yesterday was the 6th day of the conflict between Israel and Iran, which is still causing a cause for concern around the world, not just around the region. But talking about around the region, the Dubai and the Abu Dhabi indexes within the United Arab Emirates in the red, 0.90%. For the Dubai, 5,002, 58.29, and for the Abu Dhabi, almost the same margin, 0.87%, 9,413.28. So the impact of that is denting investor sentiment, and we don't know how long this will continue. But this is the final trading day for the week for the markets around the Middle East. Now, for the Tadawul, that was the lone gainer there. It was at intraday was up by a tad 0.5%, 10,315.70. While the Qatari Stock Exchange are still catching on with that negative sentiment, just at intraday down by 0.84%, 10,261.14. All right, so let's talk about the world's biggest economy, the United States. We see that the stock futures there, well, the stock futures, there were mostly not too good picture there. Just overnight, we saw that the U.S. Federal Reserve, as the country's central bank, had announced that it is still sticking to the previous interest rate. So there's no change in the interest rate, still within the range of 4.25 and 4.5%. So investors are not really too happy about that, and not to mention the impact of the Iran-Israel the conflict there, which is also having an impact, of a little bit concern. But the major concern is the U.S. Fed's unchanged stance as far as interest rates are concerned. U.S. President Donald Trump has been calling for a cut in the interest rate. But so far, the U.S. Fed Chairman Jerome Powell says he's waiting to see what the impact of Donald Trump, that's the president, Donald Trump's tariff on inflation would be like before considering any adjustment to monetary policy. So that's why the market is still in the red. So it's more like a wait and see, but not too good as far as the markets are concerned. So U.S. market will be open at about 2:30 Nigerian time here, and then about 9 o'clock within the U.S. So that's it for the markets on the world's biggest economy. Now, for the markets around Asia, which is our last stop, we see that it's mostly a negative picture there, particularly led by the Hang Seng Index, which was down by 1.99%, 23,237.74. But the only gainer there was the South Korea's Kospi there. We see the likes of SK Hynix, Samsung, and some other components of the bourse there on the South Korean bourse, up by 0.19%, 2,000, almost the 3,000 level. But for the Nikkei, it's still tottering in between 39, 38, 37, and still trying to come back. But that comeback didn't go too well for the close of Thursday's trading session. It was down by 0.08%, as you can see on the screen there. And then the final two stocks that we see within the Asian region, we see the Nifty 50 and the Shanghai, both in the red, 0.79%. That's for the Shanghai, and the Nifty 50 down by 0.08%. So, Ladi, it's mostly the reds that have it, right, even for Nigeria. But we're seeing that Nigeria's stock market might close Thursday's trading session in the green.
Might. And definitely the U.S. markets are closed today for Juneteenth. And we'll open tomorrow. We'll see how investors react more to that interest rate hold. Thank you so much, Anita, there for details in what's playing out with those markets. But let's take a look at European markets now and how they're doing. We have our correspondent, DW correspondent there, Chipondo Chimbelu. He's been keeping an eye on them. Great to have you, Chip. How are the stocks trading in Europe?
Well, the news isn't that different in terms of European shares. They are also trading lower today. The pan-European Euro Stock 600 is actually down 0.48%. And Germany's blue chip index, the DAX, is actually down 0.6%. And that is more than 1,000 points from its record high of 23,340 points, Laddie. Now, investors, of course, fear that the United States could become part of the conflict between Israel and Iran. There have been media reports that the United States President Trump has approved plans for an attack on Iran, but he is yet to make a final decision on that. So there's obviously concern over oil prices, which have already spiked as a result of that conflict. Now, high oil prices would, of course, lead to inflation, and that is why there is concern about spillover effects should the United States become part of the conflict between Iran and Israel. And Iran, of course, could also consider blocking the Strait of Hormuz, which is a major waterway through which a fifth of the world's oil supply is transported. And that is another reason why investors are, of course, keeping a very close eye on the conflict between Israel and Iran.
Well, let's turn to another topic now. See U.S. firms outspending European firms on research and development. That's R&D, and that's according to a survey by consulting firm EY. What more can you tell us about this?
Well, Laddie, the numbers speak for themselves. Out of 500 global firms that are research intensive, more than a quarter are American. And those U.S. firms spent 524 billion euros on innovation last year. And that is more than double the amount that was spent by EU companies represented in that EY survey. Now, American firms have been outspending their European peers on R&D because they, on average, allocate a bigger chunk of revenues to research and development. And that is a trend that we can expect to continue over the coming years. While European firms have also been increasing spending on R&D, US firms have been increasing their spending faster. And that is why the gap on spending has been growing wider. And that, of course, does raise questions about the EU and whether it can achieve its goal to be more independent from the United States, especially when it comes to technology.
And how does this affect EU's competitiveness?
A huge part of the trend, Laddie, that we are seeing has to do with the tech industry. Now, the leading spenders on R&D in the world are all US-based tech giants. So that is, of course, Amazon, Google parent Alphabet, Facebook owner Meta, iPhone maker Apple, and Microsoft. There is no European tech firm in the top 10. In fact, the only EU-based firm in the top 10 is Europe's biggest car maker, Volkswagen, and it is in 7th place, having spent 18 billion euros on R&D last year. And of course, VW is a company that has been struggling in recent years, and that is, of course, in part that it hasn't been able to keep up with growing competition from Chinese car makers in the electric vehicle market sector. Now, those car makers, of course, from China have been more innovative, and European companies, of course, like VW, are not just facing more competition. They also have to deal with the continent's structural economic challenges. And those, of course, include an aging population, higher personnel costs, red tape, and of course, expensive energy. So the question is whether the EU can fix its structural economic challenges at the same time and be able to motivate companies to invest more in R&D. And of course, that is going to be a very tricky task, Laddie.
All right, thank you so much, Chip, there for giving us the details of what's playing out right there in Europe. Thank you.
Cheers. Thank you.
Let's see what's happening in the commodities market now. See, in 2025, smartphone prices in Nigeria, they've risen about 80%, contributing to a 7% decline in early year smartphone sales. The NCC also reported a 29% drop in total active mobile subscribers and a 38.8% fall in average revenue per user in 2024. Let's explore what's driving this now. Let's talk to Rosemary Ahira, who's an analyst with FDC. Great to have you, Rosemary.
Good afternoon, Laddie. Thank you for having me.
So what the data is showing us, right now about the prices and average unit there of sales, that's for most of these phones. What does this mean, and what are these trends? Are they specific to Nigeria, or do they reflect a broader global pattern?
Well, Laddie, firstly, the increase in the price of smartphones, the reasons are not far-fetched. So, in 2022, the dollar was appreciated. Due to the unification of the exchange rates in mid-2023, we saw the naira depreciate a lot to the dollar to about 1,400 to a dollar. So, and as of today, we see the naira trading at about 1,590 naira to $1. So right now, Nigerians are paying almost 4 times the amount they would be paying for to get a smartphone. So for instance, say a smartphone cost about $200 in 2022. In 2020, they should be paying about 4 times that amount. So it has become more expensive. So exchange rate pressures, we have increased import costs and supply chain disruption. So import costs. So importers are facing increasing costs from logistics because of increase in fuel, tensions in the Red Sea, and also they are also faced with a lot of taxes. So they have VAT that they have to pay 7.5%. They have custom duties that ranges between 5 to 20%, and they also have other levies that they are paying as well. And all these things, all these prices, all these levies are all pushed to consumers. So consumers are faced with higher prices of these smartphones. And although Nigeria's situation seems a bit much, it's not unique to Nigeria. So smartphones the price of smartphones are increasing globally, but we are feeling it more here in Nigeria because of and other developing markets actually, because of situations that are unique to our market. That is exchange rate pressures, increased costs because of infrastructural issues and whatnot.
Yeah, it's quite incredible. I remember there was a time you could get a high-end, brand new smartphone for around 250 to 300,000 naira, but We don't see that anymore. We know smartphones, are essential for digital access in Nigeria. But with telecom, charges up 50%, the device price rising, how could this drive inflation, especially, giving ICT's 3.3% weight, in the CPI?
Well, any hiccup in the price of and telecom charges will directly affect headline inflation. In the previous CPI basket, it was about 0.7%. Now it's 3.3%. So it's a major increase, and this would put pressure on consumers who are currently struggling with stagnant wage growth, and they're also faced with increased food and transportation costs. And in practical terms, they will definitely see a reduction in income generating activities and productivity, because some Nigerians, or millions of Nigerians, actually depend on their smartphones for income generating activities. And with this increased tariffs, increased charges, there will definitely be a reduction in how much people buy and how much people put out there online. So it's going to definitely constrain household incomes and put more pressure on the average Nigerian.
All right, so with definitely we know in economics, when prices rise made for a product, there's some kind of substitute. At this point, what would you say is a substitute here for these phones? With prices really high, do we go back to smoke signals?
Well, I can say for certain there is no close substitute to smartphones, because right now, what a smartphone can do, even some personal computers cannot even do it. And we are seeing a lot of app developers developing products or programs that are specific to, or like our mobile phones centered. So because of the growing markets, and smartphones they're durable, they are easy to carry around, they are versatile. You can use them for a lot of different things, a lot of, like I said, income generating activities, from video editing to content creation and even remote work too. So as at now, there is no close substitute to mobile phones.
Yeah, definitely. Thank you so much, Rosemary, there for breaking it down. We'll keep watching to see, hopefully, this prices come down. Thank you so much.
Thank you for having me.